So, over the past couple of weeks, there has been a lot of talk about a company which could derail the entire stock market, similar to Lehman Brothers in 2008. They are, of course, called Evergrande, a Chinese real estate company. So, in this video, we're going to hear Ray Dalio's take on this. Does he think Evergrande could have a wide-ranging impact on the entire Chinese stock market? In fact, could that even spill over to the rest of the world and drag down other stock markets too? Let's find out. Okay, so let's get straight into it, and I'm not going to make you wait. Instead, let's just jump straight into this first clip.
Let's go to China now. It's so much in the news. I wanted to wait, but I think we've just got to get to China right now. This is a new Beijing. Is it a return to an old Beijing that you and I knew when you were buying Northeast Air? Or do you envision a Beijing that's moving to a new territory?
Well, you have daughter and son-in-law in Shanghai, and so we get
We're living it in real time.
We're living in real time, and the more you have contact, I think the more you understand it. I don't think it's well understood. For a long time, the question is, how can communism and capitalism coexist? That's the riddle you have to answer, and he had to answer it a while ago. And what do these people want at the top? And what the answer to that riddle was told also by Deng Xiaoping when he was asked. He said, it's glorious to be rich. And then they asked about capitalism, and he says, it doesn't matter if it's a black cat or a white cat, just as long as it catches mice. And so the idea is producing wealth. And so capitalism, yes, but the redistribution. Okay, so we have four things that are really going on in China, if you understand their intent. Common prosperity is the word now, okay? And it has been the objective to raise money and then to broaden the base of that. Okay, right. That's common prosperity. So if you look at their tax rates, they're lower than the United States. If you look at the measures of almost capitalism, they have as much capitalism or more capitalism, much more so than Europe, for example. And now they're in a prospect to broaden that. So I think there's a tendency, and an understandable tendency, to think because they are Maoist and communist that they're going to go back to that kind of a thing. And they're not. Deng Xiaoping, Xi Jinping, just, for example, introduced the newest stock market in Beijing. He made a point of being the one who introduced the market in Beijing to the small and medium-sized enterprises. They know that it catches mice. And so the issue is that the capitalist is not in control. The issue is that there's a system for the whole system, and then what they want to do is make sure that it's not a capitalist-driven system. So, and then there's data control, and then you have to understand there's micromanagement. It's like the kids, there's a top-down versus bottom-up. Whether you like it or not, it's what it is.
How can our listeners and our viewers prosper from their micromanagement of the real estate debt collapse we're beginning to see in China? What is the opportunity if we see their dominant investor position domestically go down in price? How do you play that?
Well, the mechanics are the same as the United States went through and everybody else went through. So it would be very similar to our 2008 mechanics.
Or recollapses or whatever.
So what we do, it's happened over and over again, is the central bank makes a decision of moral hazard. You know, they never used to have moral hazard.
Do you believe they're there right now after this week that we've seen in the markets?
They knew that this was happening, and there's a preparation for this, and they know that there's more, and that's a good thing, not a bad thing, because in the past it used to be that they would guarantee it. The banks, 5 major banks would loan state-owned enterprises and local governments with implied government guarantees, and it was bad. So the process is the same. Expect the exact same type of processes we would go through, which is to say that there will be stung. Investors will be stung. That's how it works. And that the system will be protected because it's denominated in their own currency.
Beautiful. I want to get this on the record, though, Ray Dalio, because every Wall Street firm is saying this morning this is not a Lehman moment. What we witnessed yesterday in the lesson in price. Explain why this is not a Lehman moment to Ray Dalio.
Well, because a Lehman moment produced pervasive structural damage through the system that wasn't rectified until the Treasury came across in terms of its borrowing, and then the Fed came across with quantitative easing. But this is not that kind of a shake-up type of thing. This is $300 billion is what they owe, and this is all manageable. The basic economics is, for all countries, in all time, is that if your debt is in your own currency, you can deal with it.
You can work it out.
You could work it out. We've
Right.
seen it happen over and over again. And it's a good thing that lenders get stung or that the borrowers get stung.
Okay.
That's how the system works.
Okay, I want to go to my number one question to Ray Dalio. I'm fascinated by this. You and I have sat at the M Bar at the Mandarin in Hong Kong and looked at that spectacular experiment. I had the honor of Lord Patton with us the day of the Hong Kong collapse, a change essentially in polity there. How should our Western banks, the people you know, James Dimon, Staley of Barclays, Moynihan of a reinvigorated Bank of America, how should the Western banks adapt and adjust in Hong Kong to new China realities?
Well, I think very simply, you have to decide whether the rules and the place is a place that you're comfortable with. They will set the rules, and you go in there and you decide if you're going to be part of that as a good citizen or you're not. And then, but you don't jump in and out. In other words, China's a strategic play. You're not going to jump in and out. And the amount that you're in should be that which you're comfortable with. It's the same as an investor. It's not smart to sell on the break or buy. It's a strategic play. Most investors are very overweight in the United States or other places. Diversification. There's a competition, a big competition, a war of sorts going on in technology and so on. The diversification, put the amount and the exposure that you want to have there, because you have to have places on some money on two chips, because there are risks in the United States too.
When we look at technology, and it's something you address courageously in Principles, the book did so well. When's the movie come out? 4th of July, what? 2024? Hanks is playing Dalio. Okay, so Principles was a huge success. If President Xi read Principles, what chapter would you want him to read? What does he need to know about Dalio Principles?
Well, I think like everybody, the key is know what you don't know, what you don't know and how to deal with it.
What does he not know about the United States of America, the resiliency of this nation from the Pacific Rim, from Australia and MacArthur all the way up to Tokyo?
Well, there's a totally different approach. Whether you like it or not, we are a bottom-up individualist. It's built about individualists,
right.
And it's built, I think.
You're the example.
And the individuals, and bring immigrants to the United States, and that the power of the individual. In China, it is the top-down, and it is an extended family. One of the leaders said to me, for example, it's like a strict parent. And so when we deal with things like video games, do you want your kids to watch video games? In the United States, we would say that's a parental decision. Generally speaking, it wouldn't be the state to make that. They would say it's terrible what's going on, and the state is going to mandate it. So that there are those two approaches, and I would say that the understanding the relative merits and understanding really how we can get along. Because there's a risk of war. There's a risk of conflict here. And so understand how we can get along. I wish that, yes, Chinese understood Americans better and Americans understood Chinese
I want to bring
better.
it back to not so much to Bridgewater, but the alternative investment business, again, at the zero bound. You've written about this. You've been very eloquent. Bridgewater, folks, has a great series out on YouTube with Bob Prince, really walking through the realities of being at the lower bound. Is the game over? Is the volatility so taken out, almost like a somnolent Japanese bond market, that we can't provide value anymore above long-only institutional money?
Yeah, the value of interest rates, the impact of interest rates has been largely taken out in terms of the magnitude. You're not going to have that kind of volatility. And if things go down, you're not going to have the same kind of protections from the bonds as you do. It's changed because then you get quantitative easing. It gets transmitted. so that when you need an easing, you get the printing of money, and then you have the reflation type of dynamic. So that's the way the volatility is transmitted. We've had plenty of volatility in the markets, but not in the bond market, right? Look at how the markets have behaved since in last April, they printed the money and sent out the checks. That's the way the dynamic works.
Well, what will the consultancy business be? I mean, we've all been wrong that the actuarial assumption is single digits, 6 or 7%, and everybody and people that caught the ride have been looking at double-digit actuarial returns. Are you and Bridgewater steeled for a single-digit future, or can you be more optimistic?
No, I think that I think we're going to get another round, another round of QE.
Well, we're going to QE Dalio now?
What, sorry?
It's going to be called QE Dalio. You're predicting another round of QE.
Not immediately. I think that what happens is you get a taper. I think like every tightening of interest rates has been less than the one before it since 2000, since 1980. Every peak and every trough in interest rates has been lower than the one before it. And then when we hit zero, then we did QE, and every QE has been larger than the one before it, because we've accumulated so much debt and that we're now printing. I think that you'll have probably one pullback, and I'll call that a mock charge, and then you set the markets down, because the duration of the bond market and the duration of assets is longer. That means interest rate sensitivity is greater. You have that particular correction, and then you'll have another round of that. And so I think that's the nature of the beast that we're in with. The QE, understand, and that means negative real returns. The things that must happen is that cash is going to have a lower interest rate than bonds.
Is America going to go to negative interest rates?
Let me get my thought through, and then I'll come to that.
Get your thought through. Continue.
Okay. So, what you'll get is a significantly negative real cash rate, a negative and probably more significant real bond rate, and that you're going to continue to have interest rates significantly below nominal GDP growth. In other words, inflation plus real growth. The average thing is going to increase. Let's take nominal GDP, that's production of inflation and growth. You put those two things combined, you would rather own a piece of that, which is a piece of the economy, than you would want to own interest rates. That's the environment we're in, I believe.
So Dalio shares some very interesting points here. The reason that investors have been so fearful about Evergrande is because the company has sold bonds to thousands of institutional investors all around the world. So in other words, Evergrande doesn't just owe money to Chinese investors. They also owe money to US investors, UK investors, and many, many more globally. That is why a collapse for Evergrande could have consequences for those outside of China too. However, Dalio isn't so concerned about this. As he says, this is not like when Lehman Brothers caused structural damage in 2008. And the reason is really simple. The debt is denominated in China's currency, the yuan or renminbi. Why is this so important though? Well, let's say hypothetically that you owe someone money and it's due to be paid back in their currency. Now, if you can't stump up the cash when it's owed, well, there isn't really much you can do about it. Now let's imagine though that you owe someone money and it's due to be paid back in your currency. And let's also pretend that the debt is so large that your government won't let you default on it, because if you do, it will have wide-ranging impacts on the economy, similar to 2008. Well, as we've seen, particularly in the last 18 months, the government will quite happily print more money to keep important companies solvent. And it's for this exact reason that Dalio believes the Evergrande situation, while it might cause some hiccups, and it has already, it ultimately won't cause another crash like 2008 because the debt is denominated in their currency. But I'm interested to know what you think. Do you agree with Dalio or do you disagree? Let me know your thoughts in the comments below. Thank you for watching, and I will see you again very soon.